Hello everyone, welcome back to another video. In today's video, we are going to learn the concepts of order flow using the market replay feature that we have on Quantower. So what we're going to look into is the footprint concepts like imbalance, volume clusters, delta, and so on. So why do I suggest using the market replay feature? Because of course, in real time, if you are trading, that is, it becomes a lot of hassle to actually look into each and every detail when you are in a trade. And it becomes very difficult to monitor all the parameters that a footprint is showing. So what I generally suggest people is to look into your strategy should be based on one or two concepts of order flow. Of course, you can stick on to or formulate a policy or a strategy only after you're aware of how the footprint works. So to start with, what we're going to do is we're going to go into the very basics of order flow. That is, only the basic concepts of order flow is what we're going to use. So what I have is the market replay. So if you switch on the market replay from your panel on Quantower, this is what you'll get. So I have selected 52,700p. Why have I done that is because we're going to look into the first half an hour, 45 minutes of the market session that happened on Friday. That is, and we saw something like this. So we'll just get in detail. Of course, when you're looking at charts in real time, you'll have the Bank Nifty futures also on your chart. So on the right, extreme right, what I have is the Bank Nifty futures over here. This is the market profile chart. For people who don't understand it, don't worry, we'll discuss it sometime later. But the idea is to understand why the market moved from exact this point and later, and could we have known that we were expecting this bigger fall? Of course not. But what we've been discussing in the latest volume profile series, I'll just dwell on that and then we'll go on. So if you look over here, what I've selected is the range is only for the 5th of July, and whenever I press start, once you download this, if you press select everything like this, that is, you've selected only the 5th of July session. I don't want anything from behind, and you can also select from where you exactly want it to start. So this is actually frivolous because this date is 22 because we just loaded 1 day of data. So if you press start, what happens is something like this starts happening, and then you have to press the visualizer button. If you press the visualizer button over here, and you can select anything you want, DOM surface, you want a chart, whatever. So we'll start with the chart part. I'll just get it over here, and then we will pause it over here. So this is the first 5-minute candle that starts. So if you see why I have selected the 5-minute bar is, although this seems a big bar, but if you look at it carefully, or if you were in the markets on Friday, you would have noticed it was a steep fall right from the get-go. Okay, so this was no chance. There was no chance of actually taking a trade during this part. So before we get further into this, I would like to just dwell upon what we've been seeing, or what we've discussed in the footprint charts, rather volume profile series in the last month or so, if you've been watching the volume profile series. If not, you can go ahead and watch. The videos are on my YouTube channel. So what we generally discuss every time when we look at the volume profile is, if you look at the previous day, you had a consolidation zone, and what we keep saying is, when we have a zone like this, consolidation, very high and low become important on the next day, rather than these nodes that we see on a trend day. Okay, so the nodes, this is again a volume, a balanced day. So wherever we see a trend day, we've been having a balanced day all throughout. This is a trend day. These are places where you can separate the nodes and so on. But when we have days like this, so I'll just place it again. This is a consolidation zone. Although we had a breakout on the upside and we had a consolidation zone, and the next day, again, this is the one. So this day we have a range within this range, and so if we look at it, I'll just delete everything. So if we look at the whole thing, this is a zone that is of importance. So when we break the value area low of areas like this, in fact this day was divided into two profiles if you look at it carefully, but it was again if you can call it a consolidation within the previous day range. So when we break a 2-day range like this, okay, and I keep repeating it again and again, in the initial first 5-15 minutes, if we break the range like this, okay, where you've not been given a chance, we have a very high probability of testing zones below. So the zones below are, if you look at it, this POC was carry forward. Okay, so it broke even that one so fiercely, and then our next target becomes the POC of this day, which was somewhere here. The market did take resistance of this place somewhat, so we'll go ahead and see what happened after that. So this is the context that we look at when we are getting into the market before we decipher or get into the footprint part of it. So this is important when you're starting your day. So even for example, I would like to bring it out now. If you're starting your day on Monday and you don't know what to expect, if you see something exactly similar to this on the upside, so what I'm trying to get at is you look at these nodes. Okay, so this was a trend day sort of, and these are the two volume distinguishing the profile of the nodes distinguishing the day. If you get a day similar to this one, okay, on the upside, that is, so if you see something like this, the market open here and move straight away like this, what it has done here, you can expect a touch of this again. Okay, so something like this and a touch of this. So this is what you are getting into when the market opens and does something like this in the first 5-10 minutes. So you have an idea what to expect, and you can then play on your moves with a good risk to reward. When you've seen these moves do not happen quite often, that often, that is, they happen once or twice in a fortnight or 14 days. So when you do get them, you can play them out with a good risk to reward, in the sense you can have a small stop loss for people who prefer intraday trading, and target something like this 53,000, 53,150, and so on. Okay, now having said that, let's get into this and the footprint charts. Okay, so just for the sake of everybody being able to see it clearly, what we'll do is we'll set everything to black so that it is visible quite clearly on the charts for you. So and one more thing that we'll do is we'll go ahead and switch on the cluster chart. So the footprint is what we're going to discuss, and let's go here and let's see what the tick size. I've kept it at 60 because this is an options chart. You can go ahead and change it. So this is the standard tick size I have set for this. So we'll just see what we have on the chart as of now. So even if you don't have the numbers or so on, so what the red part over here, the red numbers that are being printed over here, this is nothing but an imbalance. So the imbalance that I have on is, I'll just show it to you, it is 300%, or in Quantower you can call it 3 times. Let me go over here and show it to you. So it is just a basic 300, rather 3 times or 300%, whatever you want need to call it. The default setting that I have here, nothing on. The default volume color, I have changed nothing but the background over here, so that people who are new, they don't get confused. So what we have, we'll just understand this chart for people who are new and who are new to footprint. You will see these dark clusters forming wherever the volume is more. So you see these dark orange or golden, whatever color you call. So there's a lot of volume cluster is getting formed here, and the yellow is the POC of this bar. So if you see, where as soon as the bar opens at 427, there is actually no transaction, or maybe it would have taken place, but this is not a place where you can actually put on a trade. So the place where you can actually start thinking of putting on a trade is this area. Okay, now it is too early in the session, or if you are if as soon as the market breaks this region, if you want to get aggressive, you can, at 386 or this region, and putting a stop loss. But we'll not talk about that because it was too early at this point. I'll just get into where we started seeing on the footprint where the aggression was too much to handle. So firstly, when I see a candle like this, and I see, you will see imbalances forming on in the first 5-minute bar. I keep saying and repeating, it is very, very difficult to trade off the footprint or any even price action, because you don't know what exactly is going to happen. There are a lot of orders that are coming in. The market is deciding where to go, which direction to move in. It is always prudent to wait and let the 5-minute bar, at least the 3-minute bar, finish for you to take any sort of action. Okay, these are the settings. Now my first clue, even though I have seen a lot of volume getting clustered in this area, I'll just break it down and we'll start the replay again. There is a lot of cluster that is forming here. If the market doesn't move above this, okay, or fails to move above this or close above this in the first 5 minutes, there is a huge chance, if I get in the next 5-minute bar, if I get a chance, I'm likely to short in this area, expecting a further continuation, considering what I know of the volume profile or the area or the session that transpired the day before. Okay, so this is what I had seen. We have broken the volume, the low volume or the low of the day of the previous sessions, in fact the previous two sessions, and I'm expecting a sort of move to the downside in one direction, a fierce move, and then maybe a pullback again to this area. Okay, so that is what I am expecting, and that is why I would like, if the bar closes below this, I would try and go short if the market permits me. Sometimes it will happen, and so you will just see what happened on this particular day. What I'll do is I'll remove this, and I'll get another 5 minute candlestick chart for you. What we'll do is we'll again go to the visualizer and chart. So what we'll do is it'll get another 5 minute chart over here, and we'll do the same thing. We'll go to the settings so that everybody can see it properly. We'll go to and change it to black and nothing else. Okay, so what you see is, and this is the chart that we have over here. Okay, so this is the 5 minute chart what we have of the same footprint that we are looking at below. Okay, and one more thing that we can do here is we can have the time histogram and the volume on. Okay, so again I've done nothing. I've just switched on the volume because that is what we trade off, and that is of great significance to us. So I'll just switch it on so that we have a good chart for us, and we'll just adjust it like this and like this. Okay, so if you look at it, look at this 5 minute bar. Now we'll start, what we'll do is we'll start playing. So the speed you can adjust. I am having it to the least possible speed that is available on Quantower, that is 0%, and now we will start playing. Okay, so what we were talking about is, look at these areas. Okay, now I'll just pause it. Now what I'm expecting is, I'll just pause this. What I wanted to do if I wanted to enter a short is a pullback to this area, so that I can try and look for a short in this zone where a lot of cluster is formed. And I would have certainly looked at how the footprint was. If there were too many imbalances like this, I wouldn't have entered. Again, I would have a balanced structure over here where I would have liked to enter a short. But look what the market does. It straight away starts from here. Now we'll go ahead and see if we can look for a chance, and you can see what is happening. Okay, there is another cluster forming here, and we're looking again at a place where we can go short. I've paused it, and when something like this keeps happening, what we'll do is we'll switch on something else as well. Time statistics, what it does is it gives us a very good view of what is happening. Okay, and we'll switch it on. Okay, so if you look at it, look at this volume and look at the delta here, and look at what is happening here. In spite of the delta being positive, look at these numbers over here. Okay, so what I want to get at is, this is another cluster where I'm looking at whenever the market pulls up to this cluster, I'm going to go short. Why? Because look at these volumes, okay, on the buy side, and look at what is happening on the other side. Look at the delta, look at the volume. It's very it's huge for the open. So I can understand that these big volumes, even if you look over here, volumes coming in one after the other on a 5 minute candlestick bar, I can understand that there is some sort of aggression being shown by one side because the pickup in volume, and a lot of guys would have actually tried to go long here, maybe at this point, if you see. And this can be again because of the low of the last, the day before, that is on the 3rd of July. So you can see it on the footprint what guys are trying to do here. They're trying to take a pull off a long from this area. If you look on the Bank Nifty futures chart, this is the low of 3rd July. That is, if I'm not wrong, Wednesday, and they're trying to pull off a long of this place. Okay, so I can see it on the chart why they're doing what they're doing, and they're failing over here. So I would like to go on the other side on the footprint chart where I can see these guys trying and failing. And if I get a chance again somewhere here, I would like to go long. If not, it is time to now go aggressive, because I can see these guys failing, and again expecting this target, this POC would be too aggressive at this point. But at least, if you're looking at a footprint chart, at least 30 to 40 points on this strike price, that is 350, was nothing to be nothing extravagant, I would rather say. So I'll just play it, and let's see what happens. And we're getting a sort of pullback again, we are failing. Okay, so even in this bar, if we get some sort of a chance, you can see there's a consolidation. People are trying to buy off this zone that we just speaking about, and they're failing. If you look at this chart, and if you want to go aggressive at this point, you can, because again there is a cluster that is failed. Okay, so I'll just show you. this cluster has again failed. Okay, so I would have liked to go short again at a failing of cluster. So I hope you're getting what I'm trying to get at. I will just pause this again, and if you see what I'm trying to explain, these clusters that are forming on the buy side, and there is absolutely no pullback to the upside, and we know people are trying to go long because there is a sort of a support that people are expecting of this zone. This is the zone. I'll just draw it for you. Okay, so this is the zone people are expecting a short of, and it is not happening. Okay, and we're seeing it on footprint. They're failing continuously. The aggression is on the short side, in spite of having a delta that like this on the third bar also, where we was looking at. Look at the reaction, look at what the price is doing. That is why it sometimes is so important not to look only at delta, but also at what the price is trying to do. It is not sustaining at all. Okay, so we'll go forward, and it would have given you easily a 30-40 point move to the downside. Now before we play this candle, now look at this candle as compared to the other candle. Of course there was a POC here. Now if we break this, this is a change in structure, wherein we are seeing now these buyers step in, and look at this sell volume over here, 19,973. That is a huge number. Okay, and if we start moving above this, this is a change in structure, in the sense this would be the first time where this big volume on the sell side has come, and it is being taken out, or rather these guys will start getting jittery. If you look at just this number, okay, these two places, there is a lot of sellers that have come in at 270. Okay, over here and over here. If these guys if the water goes above them, they will come out, and we'll get a good chance on the upside as well. So that is why you can what you can do is you can mark these areas whenever you see something like this, that is 270, and if you see something like the market going above this, you can expect again, not blindly, but look at what is happening on the footprint like we just discussed. So we'll go ahead and play this again. Okay, and before we go ahead, look at this current bar. What has happened here is over here you've seen good volumes, and on the downside of this bar, I'll just point it out again, you've seen big buy numbers come in, 14,475 and this thing. So there is another cluster. So again, the idea is really clear for us. If the market again continues below this point, so the sellers are still in control, and if it closes above this, the buyers are in control, and then we move on and see what we can do after that. Okay, so let's go ahead and see what happens. And the POC is now exactly at this point. It is shifted from this point down to this point, and look at the market taking trying to figure out what it has to do. Look at this cluster. Okay, and it is trying to go up, go down, and this is a place where you do not initiate a trade, because you don't know. It is even on the footprint, it is so there is so much of information, and if this breaks, you can try and get aggressive, but I would rather hold, because you see what is happening. All of these guys, they're trying to figure out where the market, and this is the first sign that I can see the selling take a halt in spite of this. And there is a positive delta here, and I'll just pause it and show it to you what I mean. Okay, so this is the first sign I'm getting. I have paused this. Even if the market continues now, I am no longer interested in going in short. Why? This is the first sign I have seen. Look at these clusters forming. Okay, the delta here was long. Obviously, look at these numbers. The buyers have also stepped in here, and this place is not being breached. This is now the almost 10-12 minutes where the market is trying to figure out where to go, and it is stopping and halting. So as I said, if we I will just delete this now. If we break this zone, we're going to rocket to the other end where we saw a lot of volume, maybe this one somewhere here. So that is why I have drawn this zone. So if we move above this zone, we are going to move, and a lot of sellers are going to get trapped, at least for some time. Okay, so let's see what actually happens, and we'll play the video again, or the replay again, and see what goes on. Okay, so we're just waiting, and we're not interested in any short for this. And look at, even after the break of this zone, look at what is happening. Look at the numbers here. So we're seeing a positive delta number pop up here if you look closely, and a volume getting clustered. So again, we are not entering short, we're not going long, because there is no confirmation. There is a lot of orders that are playing in, and look at the slowness. Okay, the other thing I can do is go over here and look at the even though it is dropping over here. Okay, so we are not in any sort of trade over here. Even if the market continues to go down, let it go. it's okay. And look at the volume now pick up. Okay, I will just pause it. In this down bar, the volume has picked up as compared to the last three bars. Of course, we are expecting because we are expecting another down move or the down move to continue. So this has happened after this area has breached. Now what I will do is I will draw this area. Okay, so this is the area where I saw some sort of buying step in, or there was an attempt to absorb and go into the other direction. It failed, it has moved down. Now there are two ways to look at it. Either you go enter a short when the market touches here. Okay, and it again has to depend on how the market touches here. If there is a lot of absorption that has taken place here, a lot of sellers have got trapped, you see a high negative delta, and then the market approaches this zone, I wouldn't be interested. On the other hand, if there is I mean a little of I mean, there is no aggressive selling or an absorption that has taken place. For example, let's assume that it has gone up from here, and you looking that even in spite of these buyers failing, the drop is not that significant. It is 30 points or 20 points. So if you're looking for 30 points and you're looking at a scenario where it is a little confusing, you don't enter the trade, you just wait and hold on. And of course, if it breaks this area, you can again enter aggressively to the short side, that is. So let's see what happens. And you can again see the market altering over here compared to what we've been seeing in the previous few candles. When the market opened, there is I mean a sort of confusion that is going on here. If you look at it again, there is positive delta. Okay, so buyers are trying to step in this area, and these candles that I see over here are getting very interesting. And you see over here, okay, so this is all positive delta. So even for people who are trying to get short, scalpers or something, you could have got almost 20 points of here. So the zone that we drew, but we're not looking at scalping over here, we're looking for 40, 30, 40, 50 points. So I would rather wait. Now I will just show you something. Okay, so I'll pause this here. Do you look at these areas? Okay, so the volume has suddenly dried up after reaching this area. There is no follow through after the break of this zone. Okay, so this is a very common pattern. I like to draw it over here. So what happens is, when the market has to move up, this is something very common. This pullback or breakdown is very small in the market. The volumes dry up, and there'll be only one big bar volume on the lower side, and the market doesn't even, the next bar doesn't even close below this. So what the volume bar I'm talking about is this one. So this is the bar with the highest volume, and the next bar isn't even able to close below this. So this is a sign for you that it is going to go up like this. Okay, somewhat like this. And the other area that I would like to draw is, again, like we've drawn over here, this is the area. So now in fact I would just want to, okay, so any pullback to this zone, I am looking to go long whenever it comes in. So this 193 or short zone, I would look to go long, because I have seen some stopping going on. And of course, if we break this zone 240, we are going to really not even wait for this 270. We are going to go ahead with fierce aggression on the side. Okay, so again, you see the market halting in this zone for a reason that we've drawn. And if we don't see this area breach, okay, this pullback, what we are expecting is to take a trade over here. If we don't see this area breach, we will certainly look for an entry over here, and a stop loss could be just the low of the day. And let's see what happens. So what we're looking at is something like this. Okay, so the market isn't able to breach this zone. We enter somewhere here, okay, 204 or something. The stop loss is 180, about 25 points, and what we're expecting is at least 1 is to let's say 2 or 1 is to 2.5, because this is an area where we can expect some sort of sellers to get trapped and the move to play on. Okay, so we are there only. So let's go ahead and increase the speed if possible. Okay, so let's see what happens. If the market breaks down, it is okay. I mean, it's okay for us. And what at this point, what a confirmation that I'm getting is, so you can see you've already achieved almost 1 is to 2. The confirmation that I've got is that this is the area where the market is failing to go beyond, and you would have got your 1 is to 2 over here. So you've got your 50-60 points here against the 20-25 points. So again, for people who look to trail your stop losses, you can go ahead and trail just above this area, this zone that has broken. And you can see even look at the way it has come, and after this point look at the way it goes. So you see what was the significance of this point. All the sellers that were late have got trapped. And again, if the market pulls back, it is okay, but if you're looking for good 30, 40, 50 points, we'll just pause it. This is the way to go about it. You can plan and you can look and wait. So even it's not important to catch moves like this, okay? It is very, very difficult to catch them even on a footprint, because they're very, very fierce and fast. But if you're looking for a counter trade or a continuation trade, you can see what is actually going on in the footprint and then play out your moves. So hopefully this video was of some help to you guys. Until next time, thank you, bye bye.